Good afternoon and welcome to the Trinity Exploration and Production PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated in the right-hand corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. And I'd now like to hand you over to Nick Clayton, Chairman. Good afternoon to you, sir.
Well, good afternoon, everybody, and welcome to the 2021 results presentation and outline of our forward plans. For those of you who we've spoken before, my name's Nick Clayton. I'm the non-executive chairman of Trinity, and I'm joined here today by Jeremy Brijlal Singh, the CEO of the company. By way of introduction, we've just outlined here the agenda for today's presentation. As a start, we will outline the investment synopsis, why you should be involved in the company over the next 2 to 3 years. During that, we will talk about our onshore drilling program for the rest of this year. Especially the deeper leads which we've identified as a result of the 3D seismic interpretation that's been ongoing over the last couple of years. We'll look at what that means for our medium-term production, outline quite a lot of our opportunities and diverse opportunity set, and at the end we'll talk a little bit about our 2021 results. But the key message and the key takeaway that I'd like to leave you with today, and we'll return to this during the presentation, is that we've taken a long, hard look at our portfolio over the course of the last year. We've sifted and focused our opportunities as a result of the 3D, and we can see a very clear pathway now to growing this company, partially as a result of near-term drilling, but I think it's fair to say that we've built an opportunity set which will enable us to undertake a multi-year drilling program, which will give us line of sight on potentially a doubling of our onshore production, adding materially to our reserves, and as a result being in a position to make returns to shareholders over the next 2 to 3 years. As we go through the presentation, we'll touch on a number of areas where we've seen a number of questions, and those are SPT, the status on Galeota, the returns to shareholders and the timing of those, and also the nature of our drilling program over the next year or so. At this point, I'd just like to outline what it is that drives or should drive your interest in Trinity over the next 2 to 3 years. We are a strong cash generating business. We have, as a result, that will enable us to drive a significant level of activity, and that will drive growth for shareholders. And ultimately, we, as a result of the restructuring undertaken in 2021, will be in a position to make distributions to shareholders in the form of dividends or buybacks over the next 2 to 3 years. I mentioned at the outset, we've rigorously prioritized our investment opportunities. We have a drilling program that's 6 wells for this year that's fully funded, will give us the line of sight on very strong medium-term production, as I've outlined. And as a result of both a combination of our own organic activity and external initiatives, being bid rounds and lease arrangements with Heritage, plus bolt-on acquisitions, we think that we're in a position to significantly grow this business over the next 2 to 3 years. I'm going to hand over to Jeremy, who's going to talk through the drilling program in a little bit more detail, and more importantly, to look on the deeper prospects, which I think could move the needle quite materially for Trinity. Jeremy.
Thanks, Nick. It's great to be here. Thanks for taking the time to listen into Trinity and get an update on what we think is a very exciting inflection point for the business. We'll jump straight into it and describe the drilling program that we intend to carry out, which will commence as early as in the next few weeks or so. The drilling program for this year will contemplate 6 wells, or this drilling program rather, which will start this year, will contemplate 6 wells. 4 low-angle wells, similar to the wells that we drilled in 2018 and 2019. 1 horizontal well in the WD56 area, which will be going into an existing producing area, which has been shown very strong production, and a deeper appraisal well that will look at going into untested sands, which could have a number of various outcomes, but it looks very exciting for us. Some of the key statistics around the drilling program are we are going after recoverable barrels in the amount of 450 to 1.1 million barrels. The capex, the range looks at 14 to 17 million, and the reason that we've given a range is because we have seen significant inflationary pressures when it comes to the cost of drilling a well. From the cost of steel to mud to cement, these have had significant double-digit increases in recent weeks, if not months. Just to be clear on the deeper well, the depth that we're looking at here is between 6,500 to 9,500 feet. So not extremely deep as in terms of kilometers, and below the horizons where we currently drill into, which are between 45 to 6,000 feet in the Palo Seco area. The deeper well is an appraisal well, and therefore will be subject to approvals from both Ministry and Heritage. I'll describe the deeper well in a little bit more detail on the next slide. What we're trying to do by taking on a range of wells is to really try to expose shareholders to a varying rate or range of returns for types of wells. And in the top right-hand corner, you can see the economic returns by well type as an illustration. The low-angle well, IRRs of 30-odd% with cash returns in terms of cash invested and cash from the project being 1.4 times. The horizontal well sees this increase significantly from 31 to 120%, and cash on cash returns of 2 times. The deeper well, the IRR is actually not there because it pays back within 1 year, but again, increasing cash returns. So what we are trying to do is to build an opportunity set where we expose shareholders to an increased ratio of barrels recovered versus capex invested. The change in the drilling and the returns paradigm, employing horizontal high-angle wells, has been very much quality assured by the seismic, 3D seismic that we purchased in 2020. There's been a lot of discussion around purchasing the seismic and what the fruit of that has been. And today we can come out and describe exactly some of what that fruit will be. The current hopper, as Nick mentioned, is 40 plus infill wells, and it's a combination of at least 5 high-angle horizontal wells, which will increase as time goes by, and at least 35 plus wells in terms of low-angle wells. You will see the number of wells increase, as well as the types of wells change in terms of the makeup of high angle and horizontal starting to play more and more a part in the opportunity hopper as we move forward. I think it's important to understand that the deep well and what the potential is there can have a significant impact in terms of what our future drilling program will be. The intent of the company is to drill at least 6 wells for the forthcoming years, providing that the macro environment supports us. So in essence, what we're trying to get, the message from this slide, is that this drilling campaign is going to test our technical assurance around drilling different types of wells. To remind you, we did drill a high angle well in 2019. The well came in terms of production as planned, so the reservoir was there, the production was there. We did not manage to produce the well for as long as we wanted to at the high rates because of completion issues, but that's something that we have learned from, and we will intend to take forward into our next set of high angle and horizontal wells. What is the 3D seismic doing? And we put a cartoon up on the left-hand side that hopefully is not too technical. It's actually a line of seismic that runs across the Palo Seco blocks. If you look at the inset there down below and you see the WD2, WD5, 6, and PS4, this is a line of seismic that runs across that. And the seismic is deliberately faded into the background because we don't want it to make it look too technical. You can then see that there are a number of colorful lines that go across, that go from left to right. And those describe the horizons that we normally go into. And then some deeper horizons where you see some light blue, then purple, darker green, banked up against what are prospective oil zones. And these oil zones are essentially banked up against that red line that comes from in around 7 o'clock and goes up to about 1 o'clock. And that is a fault that we have only managed to image properly through having the seismic. The black lines going down that look like spider legs are actually well bores. So you can see that the darker ones are the well bores that are actually closest to the line, and the gray lines are those that are further away or behind the seismic line that we're looking at. Notably, most, if not with the exception of 2 wells, are very much centered or very much focused on exploiting the shallower reservoirs. Those are between 4,500 to 6,500 feet. So those areas are well exploited, but there's room for optimization. And by having the seismic, we have been able to understand the tracking mechanisms better. We've been able to correlate the way our current geology based on well correlation logs have been put together. We've actually seen areas where we've had to correct the way our geological understanding has been in order to keep true to the seismic. And that has helped us to understand where pools of recoverable reserves are still available and how we can optimize our drilling, either through low angle, high angle, or horizontal wells. But you can see that most of these wells only penetrate to in or around 6,500 feet. There are only 2 or 3 of these wells that go deeper. And if you look at what we've mapped here very crudely, you can see that those deeper wells did not optimize or target the sands that are potentially prospective. By having this seismic, having this well control, we're now able to put together an image of the subsurface that allows us to see anomalies that we have not seen before. The intent is to test these anomalies, and what we have described here is 3 different stacked turbidite sandstone reservoirs with multiple pay opportunities. So there's an opportunity here to drill a deeper well into each of these 3 zones that you see banked up against the red line that runs across the middle of the cartoon. And this is a typical example of what one of the deeper targets will look like. It is just around 9,500 feet in terms of the deepest sand there. And our intent is to drill through existing producing zones where there'll be stacked pay, but go down into these deeper areas and test these sands to understand the reservoir's deliverability, to understand the hydrocarbon, and see if we can actually produce from this. The technical team has given us a 55% chance of finding between 1 to 5 million barrels of oil in place, with an upside of over 11.5 million barrels. This is very significant for us. When I get to this slide, I'm describing the onshore reserves. You can see that the potential, we'll try to put an illustrative impact on the potential of the onshore reserves. And you can see that one lead that can turn into a prospect could be very meaningful for Trinity. And what the team has identified is actually 9 leads similar to this that we'll be going after in the near future. One of these we intend to drill in this campaign, and it may be drilled either in late 2022 or in early 2023, depending on the supply chain restrictions that we have in front of us. This is what has us, as a management team and a board, very excited about this drilling program. We put together a projected production profile, and it's based on 4 layers. There's a base, which is the dark, deepest green, and is a base that you've been accustomed to seeing Trinity manage very assiduously over the last few years. The base has very low decline, very low risk. It's repeatable, and it's what underpins the operating cash flow, the profitability that you've grown accustomed to. Add the low cost base and the low break even, and you can see where the opportunity in terms of increasing oil price and increasing production comes from. I appreciate that the increase in oil price is a topic that we must touch on in terms of hedging, and we'll do so later on. The next skin, or the next layer, is a slightly less bold in terms of the green, and that represents the onshore drilling, 6 wells per year for the forthcoming next few years at the very least. You can see that this offers us the opportunity to grow, but it's not very significant growth. There's gentle growth there, but it is low risk as well too. So we believe that offers us the opportunity to sort of hold steady, have some gentle growth, take on some different types of risks in terms of high angle horizontal wells where the returns are premium and get a better capex invested to barrels recovered ratio. But what is really exciting is looking at the appraisal drilling. And in the first instance, if the well is successful, you can see what that looks like in a success case, where it sort of takes production from 1 time to maybe 1.3, 1.4 times the existing production. But in an upside case, if the well is successful, this single lead that we mentioned before, you can see the ability for this to transform production. And it should be noted that we've got 8 other leads that the team is maturing into prospects. Not all of these will mature into prospects, but having multiple leads allows us to build a hopper and therefore put our capital to work for the best opportunity. And it's also important to note that this illustrative projection excludes Trinitys, the redevelopment of the low-risk 2P reserves in the existing production there, the Echo development, Brighton infill drilling, and appraisal and prospective drilling in the Point Ligu, Guapo Bay, Bright Marine asset. Trinity today announced that we have around 67 million barrels of reserves and resources. And we try to break that down into the 3 different asset classes: onshore, East Coast, and West Coast. I'll start off with the onshore on the left-hand side. And you can see the first bullet that we point to is base production. And in fact, if you look at the base production for East Coast and West Coast, what we've done is put a ratio of 1P reserves to production. And you can see that that is 9, 15, and 17 years respectively, which means that the dark green band that we looked at before, the base, has a significant amount of running room in front of it. So therefore, the underlying cash generating business has significant running room by which we can continue to build cash reserves onto the balance sheet. The onshore, though, in terms of 2P, 7.3 million barrels, and 2C, 3.8, is significantly dwarfed by the East Coast if you look across very quickly. But what we've put on there is layered on what the potential for appraisal and prospective resources can do. You can see if we are successful with the appraisal and exploration drilling that we propose on the onshore can soon begin to rival the East Coast in terms of converting prospective resources into 1P production. For example, if the appraisal well that we intend to drill is successful, we can bring production onto that almost straight away. It is close to existing producing facilities, and it can form part of the existing production train that we already have. So you will see quick production from this, and it can also develop both 2P reserves and 2C reserves. In terms of the East Coast, a large figure in place there. You can see the contingent for Echo shallow and contingent for Echo dominate the reserves for the East Coast. And it's been we've mentioned it publicly. We commenced a farm down process in December. We had a number of different companies exhibit interest. We were very encouraged by that. We carried out a number of management presentations, but we were of the view that the SPT reform would happen in line with the process, and that did not come to pass through a number of different reasons. Through what has happened geopolitically, the oil price that we've seen, and then with changes happening with the US removing certain sanctions from Venezuela. We think the government would be hard pressed at this point in time, just like other governments with high oil prices, to provide tax breaks to oil companies. But we also think that whilst this is the current state of play, we believe that once things settle back down, that the SPT reform, the fiscal reform, which is required to attract foreign direct investment into new onshore bid rounds or shallow water bid rounds, has to be changed before these various activities kick off. So without the SPT reform, the decision of the board in best interest of shareholders and getting the best value for Project Echo has been to pause that process until we see or get line of sight on SPT reform and understand what that looks like by way of the impact and valuation. However, given that we've got significant 2P and 2C reserves in the existing Trinitys area, the team has turned its eye towards looking at a renewed field development plan to getting back to drilling on the Trinitys asset in as early as 2024, 2025. It should be noted that some of the wells on the Trinitys field are almost as large as the appraisal well that we described before, where you have IP rates between 200 to 700 barrels and wells recovering up to 500,000 barrels. So quite significant in terms of value, production-wise, as well as cash flow. On the West Coast, I'll just touch on it very quickly. We've got good 1P to production reserves there in terms of 17 years, that ratio. ABM 151, we're going to reactivate that well. This is a well that is very low geological risk in this, so it's really operational risk. We intend to bring that on later on in Q3 into Q4 this year. And then as we mature the technical understanding through purchasing 3D seismic over the Point Ligu Guapo Bay asset, which is the PGB asset, we'll be looking at assuring the ALM 22 appraisal, as well as potentially drilling deeper in that area for another prospective area. What I would suggest right now is stay tuned for the West Coast, and you'll see that developing in the next sort of 6 to 9 months. Otherwise than that, the ministry, there are 2 bid rounds that are due to get underway, the onshore and the shallow water, both of which Trinity will be interested in. There is a deep water round which is in play right now, but Trinity is not participating in that. Heritage, as a continuous business development hopper, the next round of business development is to provide some further subleases looking at enhanced oil recovery. We have entered into that, and we'll look at that as information becomes more available to us. And finally, looking at bolt-on acquisitions. I mean, if you look at the 3D seismic in the previous slide, where it covers the 3 assets, WD2, WD56, which were already in our possession, but the seismic also allowed us to see a significant portion of PS4. It allowed us to drive the technical understanding for why we would want that asset and focus really not on the flowing barrel, but the running room that an asset adjacent to both WD56 and WD2 would offer us as we drive forward to trying to increase production through the drill bit onshore.
We've touched upon this in previous presentations, but I think it's probably one of the most important steps that we as a company took last year in forming the technical committee. It's helped us to cut to the chase very quickly in terms of sifting our opportunity set. More importantly, following the passing of Bruce Dingwall, I think it's provided the board with an extra layer of comfort and quality assurance. And I think hopefully that's going to lead us to improved results from drilling and mitigation of risk from that activity. So I make no apologies for re-emphasizing the importance of this development for the company. We've got 3 world-class experts who've joined 2 members of the board to form this committee. These individuals have experience across a broad range of hydrocarbon basins around the world, and it's a very, very important tool for the company. Jeremy?
Thanks, Nick. In terms of the 2021 results, most of this is already out in the public space based on the quarterly updates that we provided. But today we've given the final results. And within that, you can see production has held very strongly year on year. Without any drilling, we've managed to hold production at only a 5% decline year on year. Bear in mind that the natural field decline levels are between 7 to 10%. So the operations team, the facilities team, the health and safety teams did a wonderful job last year of holding production up for the benefits of cash flow generation, which you can see right below. Cash flow from operating activities increased year on year. Yes, there were better oil prices, but the business model is very strong with a low break-even of 29.2. And that's, we've held the break-even below $30 for the last 6 years. I think it's going to be very difficult for us to continue to do so into 2022 based on the inflationary pressures that we see. But once we can increase production, you will see the break-evens going to sub 30 again on a moving forward basis. The work activities completed 7 recompletions. We were a bit less than we'd usually do. You normally see Trinity doing between 12 to 15 recompletions per year. But it gives a little bit of, tells a tale in terms of COVID, because notwithstanding the natural field declines, the team was also impacted by having to spend a lot of time and effort looking at the business continuity practices to ensure that the team remained as infection-free as is possible so that we could continue. But also we saw in other areas where the regulatory bodies needed to get involved, where reduced staffing, changes in work practices just made things a little bit slower. And we continue to see that in this year. But I have to say, Trinidad is coming along. We're not quite where London is, At the moment, our vaccination plan was 6 months behind, give or take, but we are coming along. Things are getting better, and I can say that we are clear in terms of the approvals to move forward with the initial part of our drilling program. And as I mentioned, for the deeper appraisal well, we will seek the approvals appropriately. 50% of our production onshore is now automated, and we are seeing already good signs from that in terms of the value that will bring in terms of reducing the amount of interventions required, being able to intervene much quicker, being able to optimize the production, and generally being able to reduce logistics costs around where we need to monitor. So what we are trying to achieve, as a reminder, is what we saw on the East Coast when we did the automation and logistics cleanup on the East Coast, where we saw a benefit in an uplift in production by 20% without any new drilling, and a reduction in operating costs by 40%. So we're not quite there yet with the onshore, but certainly having 50% of the production automated has given us significant insights. Other main achievements during the course of the year, all of which has been announced and been in the public space for some time, are around the Galeota license, where we have much improved commercial terms and a much stronger license. The onshore lease operating agreements, which were renewed for 10 years on better terms than they were before. Completion of the PS4 acquisition in December of last year. And of course, I mentioned the onshore seismic in significant detail, but it shouldn't be. I would say that the job with the 3D seismic is not complete. We do have some product right now, but we continue to look at the 3D seismic to help influence and grow the opportunity set, both in terms of existing wells, deeper wells, and also enhance oil recovery in due course. We have energy transition initiatives underway. We have commenced our solar irradiance study in Galeota, and initial readings from that are showing that the mesoscale or the satellite data that we've used before has been inaccurate to the tune of even up to 50% in some instances. That is very meaningful for being able to plan what a power plant may or may not be able to do in due course. And we've also looked at energy efficiency in the WD56 field, where we've ascertained what the power requirements are, and we've built a solar system that has now taken that field office offline and provides green energy. Robust production, I mentioned and touched on before, and Nick has touched on in terms of strengthened board, particularly with the technical committee. The foundation that we have is dependable, it's stable, and it's cash flow generative. I'll hand over to Nick now to conclude.
Thanks, Jeremy. Just to sum up where we are as a company, financially strong. We have a strong cash generative business that is capable of funding an acceleration in investment, and you're going to see that in 2022, but also going through over the next 2 to 3 years in terms of a consistent drilling program, and that's supported by a strong balance sheet. Jeremy's already alluded to the base production, which gives us that strong cash flow foundation and substantial reserves and resources to exploit. It's important not to forget that we have close to $200 million of tax losses, which will mean that growth of the company will be done on a tax efficient basis. And there is a prospect of fiscal reform to unlock further investment. But just on that point, SPT reform, and Jeremy and I have courted the ministers in Trinidad assiduously over the last 6 to 9 months. We were given very clear assurances that fiscal reform was on its way. And then Russia did what it's doing in Ukraine. And I think there's no government anywhere around the world that's prepared to bring about fiscal reform and hand money back to the oil and gas industry while oil prices and gas prices are where they are. So I think we just have to be patient. I think the government knows what they need to do, but it's just going to take a bit longer than certainly we'd hoped. And the overarching message here is that we have very clear line of sight now, having sifted all of our opportunities to grow this business, to generate free cash flow in a way that should enable us to deliver cash returns to shareholders on a 2 to 3 year view. So that's all in terms of the formal presentation. By way of closing remarks, I'd like to thank all those who have listened in today, given up their time to listen to the story. I hope that we've conveyed the genuine excitement that we feel as a company and as a board and a management team about the prospects for the company over the next few years. We are going to be busy, and I think 2021 has been a difficult year to navigate, but in many ways we've worked out exactly where we wanted to go, and are about to embark on that path. So I think that's all I wanted to say, and I know that there's a Q&A. There are questions and answers to be fielded. So I'm not sure who's handling that.
Nick, Jeremy, I'll handle that. But first of all, thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated in the right-hand corner of your screen. I'd also like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. We received a number of pre-submitted questions focusing on a few themes. While some of these have been addressed in the presentation, the company will talk to some of these in more detail. And the first one reads as follows. Is there an option to postpone Galatea development until Trinity has sufficient production to organically fund the development?
I think the simple answer to that question is no. I do not. I think the board is of the view that it's highly unlikely that we as a company will fund the development of Galeota as 100%. So we need to execute the farm down to mitigate the risk for the company, and to assist us in development of those options. So in simple terms, I don't think as a company are going to develop 100% of Galeota, based on organic cash flow generated by the company.
Thank you very much for that, Nick. The next question here relates to production levels and reads as follows. What is the expected production level completion of imminent drilling campaign? Is there a view on the realistic attainable onshore production with current assets in the long term?
I think, Jeremy, you can put some light on that.
Thanks. I mean, what I will do, I'll just turn the slides back to the production projection that we had. And you can see what we have with the onshore drilling, but the appraisal drilling being potentially very transformational for us based on the existing assets that we have. Whilst I would have to say that there is risk around the appraisal, having multiple appraisal or leads which can mature into prospects gives us perhaps a greater chance of achieving this production profile. And also it excludes, very importantly, the drilling in Trinity and Brighton that can also materially increase the production projection for Trinity.
Thank you very much for that, Jeremy. Next question here asks, in the increasingly likely absence of meaningful fiscal reform, how does the company propose to increase shareholder value and provide a return?
I can take that, Nick. I think hopefully we've described during this presentation the multiple pathways that we have and the one that we are going to execute on now, which is the drilling program. We believe that by looking at various techniques, we can also try to increase the rate of return, notwithstanding what the current fiscal environment is. We think that there will be upside if fiscal reform does happen, but it doesn't prevent us from trying to grow the business through the drill bit and develop both the onshore and then eventually the low-risk 2P reserves on Trinity.
Thank you, Jeremy. Here we've got a question that asks or reads as follows. You still expect reform, but the devil will be in the details. You could be let down again by a weak and feeble reform. A hard question perhaps, but what do you think on this?
Well, I think, whenever you're dealing with governments, there is always a level of risk. There's always a potential for delay. But I think, it's doubly difficult to predict where this is going to go at the moment, given the uncertain geopolitical environment that we face. So I think, the optimism, if there is optimism, comes from a very clear understanding from the ministry and the government that they need to exploit and maximize reserves and production in Trinidad over the next several years. And they will realize that in order to do that, they need to improve the attractiveness of Trinidad as a place to do business vis-a-vis other jurisdictions around the world. So I think Jeremy and I would say that, you know, we're pretty confident that the government knows what they need to do. But obviously, politically, it's very difficult for them to do that in the face of $100 plus oil prices and the impact that that's having on inflation, etc. So, Jeremy, I don't know whether you want to add anything to that.
No, I think, Nick, we've covered SPT reform. We remain optimistic. We understand that the Minister of Energy very much wants to do business in terms of the onshore and shallow water bid rounds, and he's told in the public space that, you know, the fiscal reform needs to happen. So I think it, as Nick has said, you know, we strongly believe it is a matter of time.
Thank you very much for providing a bit more colour there. Just turning to the next question. You've promised a proper step change in production. Are you aiming to expand Trinity's production per se and even West Coast?
I think we've tried to address that through the slide that is currently up, and mentioned that we have multiple leads available onshore, as well as the 2P within and 2C within the Trinidad area. And the West Coast, as I said, you know, let's stay tuned, and hopefully in the next 6 to 9 months we can describe the West Coast in more detail. I think the important takeaway for me that I'd like to impress on everyone is that Trinity, through the group of assets that we have a number of different opportunities by which we can grow production meaningfully. And the reason that we felt confident as a board and a management team to put such a projected production profile in front was that it was not based on a single opportunity, but that an opportunity that could be supplanted by others in the event that it didn't pan out as expected.
Thank you very much. And the final pre-submitted question we have here asks, how many people Trinity Exploration and Production currently employ?
Yeah, based on the RNS that we provided today, we employ 245 people as at the end of 2021. We are still in or around that. I see that there's a further question that asks, you know, is it sensible to make some redundancies until SPT reform comes along? I think in looking at our cost structure, we must look at what is applicable and what we're trying to do. We've held break even for this business below $30 for the last 6 years, and I think we probably stand out in other producing operators who are listed or otherwise in terms of our low cost structure. What I would say though is, with the inflationary pressures that we're seeing, and that we may go above $30. In fact, we are projecting that we should be in or around $31.50 in break even for this year. We have to, one, take into consideration the inflation, but also two, in order to deliver the type of growth that we would like to see, which will deliver not just production growth, but hopefully equity growth, and then the cash flow stream that allows us to deliver value to or return cash to shareholders. We need to invest intellectually, and we've done so with the technical team. You are seeing what the results of that is like, and we're going to continue to do so within a range as agreed by the board, within a range that our financial projections allow us to suitably do so. So there are no plans for any redundancies at this point in time, but we want to make sure that we are intellectually capable to deliver the growth that we have presented today.
Thank you very much for that, Jeremy. That actually concludes the pre-submitted questions, but as you can see, we've received a number of questions throughout today's presentation, and thank you to all the investors for submitting those. Could I just hand back to you both just to read out those questions and give responses where it is appropriate to do so, and then I'll pick up from you at the end.
Yeah, so we've got several questions here. One from Ross A. You say we understand that the government's deliberations on tax reform, specifically SPT, are ongoing. We look forward to keen interest to receiving positive news. Can you elaborate on the basis for your optimism? And I think I've done that. I mean, actually, the government needs to drive tax reform, because otherwise it's going to get left behind in the race to attract industry dollars over the next 4 or 5 years as we move towards transition. Secondly, from Ross, very active, Ross A. When in Q2 do you expect Trinity to spud the first well? Well, we've broken ground on the first well this week, and I think we're expecting to spud, Jeremy.
Mid-June is when we should be. We've guided the markets in July to allow for any weather delays, but with all going well, we should be spudding by mid-June.
Okay. Does the Trinity acreage have any deep Cretaceous potential? That's from Jerry PL. Clearly, I'll just say a couple of comments and then Jeremy can pile in behind. But NWD was all about, or a lot of it was about, deeper Cretaceous opportunities in Trinidad. And obviously we were working with a well-known international partner on assessing that deeper potential. And I think we've announced some time ago that having done all the work that neither us nor our international partner believed that the risk involved and the potential was sufficient to warrant taking NWD further. So I think never say never, but deeper Cretaceous wells at 10, 15,000 feet is not where we're going to focus our attention in the very near term. Gerald?
Nothing to add to that, Nick. I think, I would just say having the technical committee on board allowed us to quickly reach to that point, and for the technical team to have a peer review decision that the board was quickly able to respond to and say that that was out of our reach at this point in time, as Nick has described.
ONT, given the strong pricing environment and weak share price, has Trinity received any proposals over the last 12 months to acquire some or all of the group's assets? Well, I think clearly the answer to that question is no, in that if we had received such an approach, then under the takeover code, we would have had to have made it very clear that we'd received such an approach. So the answer is, to this date, to this point in time, no. Jeremy? I don't think we can say much more than that at this stage.
No, agreed, Nick.
Well, Nick, Jeremy, thank you very much for that. I think you've addressed those questions you had from investors, and of course, the company will review all questions submitted today and will publish those responses on the Investor Me Company platform. Could I please ask investors not to close the session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of Trinity Exploration and Production PLC, we'd like to thank you for attending today's presentation, and good afternoon to you all.